So what's going on, folks? Welcome to the Way Podcast. Thank you for joining us. If you are here from Instagram, I want to welcome you all to the first YouTube live stream. So thank you for joining us. Today we have a very special guest. Definitely want to let you guys know that this is going to be a very interesting first live cast. We're going to be talking about stocks. We're going to be talking about the mission of the Way. And we're going to be talking about social applications and how we can leverage those to benefit ourselves long term. So without further ado, I'm going to introduce our guest. Her name is Janelle Alvarado, and we have a very funny story. So I'm gonna put her on first, and then we can kind of go over how we met and all of that other stuff. All right. So Janelle, welcome to our live stream.
Okay, great. Hello, everybody.
Hey, what's up? And, Janelle, just to give folks a little bit of idea of things that you do. I mean, you're a founder and CEO of Retail Boss, you trade stocks, you're a speaker, you do retail, music, you write, and more. I mean, just let the folks know a little bit about your story and what you do, and we can kind of get into this episode. So tell them about yourself.
For sure. So hello, everybody. My name is Janelle Alvarado. So thank you so much for the introduction. I do a lot of things. So I dabble in a lot, but I would say the primary thing that I do is still in retail. I do retail consulting. I run a community where I help people start their own businesses. So whether it's a product-based businesses or you're trying to be a fashion designer or you want to have your own beauty line, I help with that by connecting people with the right resources. So I am very much into networking. I network all the time. I have a network of over 1,100 suppliers, all ready to work with small businesses who have small MOQ, which means minimum order quantity. So in order to help businesses start up. So that's really what I do mainly. And then also on the side, I do production primarily in Afro beats. So I work with a lot of Nigerian artists, all of the most popular ones. I will go down mentioning because, that's a whole nother topic, but I also do that. And then, yes, I also speak and I also write. I have my own website where I produce articles featuring entrepreneurs, and I'm always speaking at different events related to business.
Wow. And that is a mouthful and a resume full. I think if someone like you showed up in my HR office, we would just hire you off just the strength of the resume. You've done so much. So, I mean, welcome again. And thank you. And it's so funny, folks, like the way that Janelle and I met, it was happenstance, literally. There is a new social app. So we're talking about this right now. So all the folks on Instagram that are following me, please go into the bio and you can listen to us on YouTube live. That's where all of the podcasts will be going. So just click the link in the bio and you'll see where we're at. So I'm on in this networking group application called Clubhouse. It's new. And I was invited by a gentleman by the name of Rob Tankson who hooked me up. So Rob, more power to you, appreciate it. And it was crazy because I was on there today on my way to work and decided to jump in a chat room and just speak. I happened to be the last speaker on the chat group. And I guess you can pick up the story from there and I'll finish up on.
So, we're in different time zones. So I think it was morning your time, bright and early. And then for me, it was more, around lunch. I was hungry. I was kind of angry at the time. So, Clubhouse is an app, just like you said, an application where it's more audio based. So people can create these chat rooms and different chats are happening. You can join and you can be a part of the discussion or you can just sit there and listen. So I was busy trying to figure out what I was going to eat. And then I got a notification that somebody was on Clubhouse and something. So I clicked it. Brought me to the main news feed and there's a bunch of different topics. The topic that person was in, I wasn't even interested in. So I'm like, let me exit this chat. But now I'm already in the app again. That's how Clubhouse gets you. That's how they get you in there. Oh, yeah. They tell you that somebody else that you know is having a chat. Anywho, so I go searching and there's something about, I don't know if it was stocks or financial literacy, something around that. And then I clicked it and then you were speaking. Yeah, so yeah, you were speaking, and then I like what you were saying. You were talking about an e-commerce company that you had success with, and you were talking about how most people don't really dabble too much in stocks, and how if more people knew about this and everybody could get in it, you know what I mean. You were looking to help give that knowledge to everybody there, and people were so interested.
Right.
And I just followed you, and then I exited the chat because I like what you had to say. I think it was like 2 minutes.
Right.
And then, yeah, then I connected with you through Instagram. I just sent you a DM saying, hey, I listened to what you said and we should stay connected. And here we are.
Listen, as random as that sounds, and this is the power of something like Clubhouse. And I think that folks who haven't heard of it, I mean, granted, you need to be invited to it, so that's probably why you haven't heard of it. But the Clubhouse app has been an amazing connector for folks. I spoke and Janelle heard what I was saying. She messaged me back. I added her as well. Looked at her page, was able to kind of see what she was about. I'm like, okay, let me just message her. And the reason why was because we're talking about stocks, and where I come from, my stock background, that was my finance background, and I didn't see a
Mhm.
lot of females, okay, especially black and brown females,
Yeah.
in my organization doing mutual funds, stocks, bonds, whatever have you. So when you
Mhm.
started saying that you deal in stocks, I was like, okay, wow, this is great. You and I should get together and talk about it, because I feel like having different perspectives when it comes to the same subject from a male and female perspective is actually really good. And in our industry, that's not really something that's common. So I
Yes.
jumped at the opportunity. I was like, okay, are you okay tonight? Like, I have a live coming on. Are you able to do that? So I appreciate you stepping through and being able to.
Oh,
Uh,
yeah, absolutely. I am super stoked to be here.
right. Well, let's get into it. I definitely want to queue up one sound bite. So we're going to start off with this sound bite that I have here. And if you hear my daughter in the background, please don't be mad. That's just how it goes. All right. So here's my sound bite. All right. This was in August of this year. The same stock I just mentioned, Jumia, they had a growth spurt of roughly from $6 when I sold it to $16 in the last 30 days. People that have Jumia stock right now are living. Why? Because it was a $6 investment. They doubled it in 30 days, and you will never get that interest in the bank. So to me, we have to start looking at things on a way where, it is, you have to invest your money, and you have to not rely on things that aren't going to be useful long term. So that was an episode that you'll actually find on YouTube where we were discussing just different stocks. And today we're going to talk about this one real quick, because I definitely want to get into some of the things that you know about Jumia stock there, Janelle.
Yeah.
But this stock specifically, I have been following this stock like a hound, just because again, I knew some things going into it, so I kind of had to make sure I stayed abreast of it. So Jumia is essentially like Amazon of Africa, essentially.
Yes, it is.
So what have you heard about Jamaica? Because you know about it. So before I get into it, you tell me,
Yeah.
what do you know
Yeah.
about
So,
Jamaica and how you find about
for
it?
sure. So I'm based here in Canada. And as I had mentioned, in the production side of what I do, I deal with a lot of African artists. So because of that, I've learned a lot about what's happening over in that market. And yeah, Jupia, I've heard so much about it where exactly that's your go-to online shopping place, just like an Amazon would be, right? Or an Alibaba would be. So definitely is a powerhouse. Definitely is something I've heard about. I heard about, the IPO coming out, everything like that. And then, yeah, so super interesting stock. So this is the stock you were actually talking about in that Clubhouse, that chat, because somebody asked you, they're like, "Oh, what stock are you talking about?" Because you weren't really telling all of the secrets, but then you dropped it, and they were, oh, the room went silent. People were writing down notes. And then, I already knew about the stock because I myself, that's what we were talking. I deal more in like retail and e-commerce
Right.
stocks, right? So I totally knew what you were talking about. So I'm excited to know your outlook. Like, add more to what you were saying. Like, what is Jumia like? What have you been watching over this time that you've been keeping up with it?
All right. So I've been following these guys since I'd say their March time. So February, March. They had uh, a meeting, corporate shareholder meeting, and I was listening to it over the phone. I'm like, wow, these guys are primed. I'm like, we have a pandemic right now, but that doesn't matter, because their business model doesn't change in a pandemic. And when I figured
Mhm.
that part out, that simple connection, like, if your company's business model is virtual, e-commerce, and we're shutting down all of the other manual processes, you're going
Yeah,
to be fine. You're actually going to see a burst in revenue sales just because, again, the style of
absolutely.
company that you have. So my thing was back then, and I'll show you when I invested. I got in. This is a 6 month ago to year to date. So on our chart here, you can see the year to date. I got into Jumia. I was in there last year as well, but I only had like 100 shares. It wasn't a lot. But around, as you guys can see the chart right about here,
Nah,
March 18th,
right at the
230.
bottom.
Yes. 239. All right, folks. That's when I started dumping money into this thing. I was like, I
Yeah,
don't give a darn what it is. If this thing started off at 16, went
yeah.
to 46, dropped back down to $2, I'm like, in what's about to happen with this pandemic, if it's short term or long term, if
Hmm.
these guys keep doing what they're doing,
Yeah,
they should be fine. So I
absolutely.
decided to literally liquidate all my other positions. I had maybe 5 or 6 different stock positions at the time. I don't really have a lot of diversity in my portfolio. I just have like 1 or 2 big winners, and then I have a couple of things I dabble with. I liquidated everything. I had Tesla stock, I had everything. I liquidated all that, threw it all into this, and
Tesla's
I
doing
rode this
really good right
wagon.
now too, though.
Yeah, in March. So two my I think the average cost of share I had was like 279, 280 because it started going back up. So I got up to about 1,000 shares, and I literally held it until it got to about here. Where is it? Like between this rise here, like this is 780. I sold it around six something. Okay. And I'm kind of mad that I sold it at $6 because I knew what it was going to do. I knew it was going to run until
Yeah.
about 45, 50. But at
Hmm.
the time, I got an opportunity to invest in a business. And I said, you know what? Jumia stock, even if it goes to 45 or 50, whatever have you, that's a lot of money for a stock portfolio. But
For
this
sure.
business idea can actually generate that per month. So let me get myself feet first into this business idea and get back into Jumia later, you know? So that's what I'm doing now. I'm dollar costing back into it as I'm going to advise all of you to do. But I jumped out around $6.
You
And that
still
was my
had
jump.
huge wins, you know?
I mean that's a
Huge.
50% gain. That's 120%
That's
gain. Like I
huge.
went from,
Yeah,
my portfolio doubled. I was like, okay, this is great.
amazing.
Yeah, but the rest of you who hung on tight, okay, this thing went to 19. Now it's dumping back down, and now it's at 32. Now it's hitting back down. Now,
No,
I
yeah.
want to give you guys this is the future outlook for this. So for folks who are listening right now, the reason why I want you to look at the stock charts because this is how you should be looking at stocks. Look at the chart, look at what it's been doing in the last 1 year, the last 5 years. This is how I look at things because when you can visually look at a stock chart, you can kind of see what to expect. So
Hmm.
if you look at where it is now, it's at $36. It jumped back down to 27. Now it's back up to 32. Okay. This mark right here, this is the highest point that Jumia ever had after its IPO.
Yes.
April 22nd, 2019, it was at $40.21. That is going to be a marker that I want you to book. That number is going to have resistance. And if you look at Jumia's chart, every time you see it drop to a certain level, there is always resistance at that level. So on March 13th, it dropped down to $19. Look at the other side of the chart over here. You see the
Hmm.
resistance that happened around $19?
Yes,
See
yes.
that? Okay. And then drop back down again to what is this? $13? Okay. When it came
Hmm.
back to 13 again, it flew past 13 but hit resistance and came back down to 13. So all of these points that Jumia had dropped from, there are institutional traders who have large numbers of stock that when they hit a certain number, they sell. And when they sell, that happens every single time. And if you see any gain in Jumia, like this one that happened in August 3rd, those
Yeah,
institutional traders sold. Boom, dropped it back down again. People like you and me started buying. When we hit another mark again, it's fighting that line.
exactly. I see what you're saying. Wow.
So it's fighting the line, and it's always every stock will do this. So what you're seeing right now with this stock, I want you guys to know that every single stock will do the exact same thing. But if the fundamentals are good, they will burst through that mark like exponentially. So it went from literally
And it goes for a run.
14
Yeah,
ran up to 36, and now it's
yeah.
hitting the next point because again it's getting closer to where it was over here, right? This $40 mark, it's getting close. And as you can see, it's going to do the exact same thing it did down here up here.
Hmm.
Now when Jamia breaks 40, it's going to be a run to the hills. So for all of
Yeah.
you who didn't get into Jamia at $3 like I did, and sold out at 6 like I did. For those who held on, I have a few folks that I advised on this and they held on. It's not too late. And
Mm-hmm.
again, this stock has a very bright future because of two things. One, its business model. Two, Jumia Pay. Jumia Pay is a contactless pay system that allows them to transfer goods from buyers to sellers without having to even see anybody. That is similar to Apple Pay. And in Africa, that's a game changer. So because of that, and they're increasing that portfolio part of their business, because that's what they're banking on for the future, their outlook looks great, especially in a pandemic. So folks, for those who haven't joined this ship, just because it's at $32, don't be mad. It's going to go higher. So, but just be prepared for the resistance, and it's going to happen. I would say when you see it get to 40,
Mm-hmm.
it's going to bounce. It's going to bounce down a little bit,
Bounce down,
but don't be.
and then
Your thoughts, Janelle, now that I've mentioned that. Do you see that in the chart?
yeah, I totally see that. So are you saying, based on what you're saying, when it gets close to 40, there will be
Mm-hmm.
a little bit resistance there,
Mm-hmm.
and then maybe some sell-offs will happen, and maybe it'll drop a little bit more down,
Mm-hmm.
and then once it gets back to 40, maybe the second time around, it may break.
Right. Now, here's what you look for. Okay.
Okay.
You always look for the last bounce. So
Yeah.
if it gets to 40 and then it drops down to here, to the 18s, the 20s, the 14s, if it drops down to here, you're in trouble.
Ooh.
As long as the drop down from 32 does not go below this 1469 or even this 1895, as long as it doesn't go below that,
Okay.
we're primed for another run.
Okay.
That's how it works. So
Got
you can
you.
see in this one, it went up to 19, dropped down below, but it didn't drop. See this level here? Even
Yeah.
though it dropped low, it's not lower than over here.
Yeah.
This
It's
is
still
521. The lowest here was
going up.
still $7. So
You
you want
know.
to look at the previous lows after the dip and before the run to see where you don't want it to be. And every single time, this is what you want to look for. The previous low was that, which is lower than this, which means you're good.
Mhm.
And again, keep moving with that. So again, this is the number we're looking for. As long as it doesn't drop lower than $14, if you get it down to 19, 18, 17, whatever, you're still good. As long as it doesn't touch 14, you know that the thing is running and it's going to continue to run.
Mhm.
So that's just a little trick that I learned in watching stock charts that you guys can take advantage of. Because
Thank
again,
you. Thank you for that tip.
it's pretty accurate. It'll always walk. And one thing you can also look at too is volume. So volume is this little tracker in the bottom. You see where my mouse is? This little bar at
Yes.
the bottom. That's
Mhm.
the volume.
Volume of
Everything's
trades that day.
Yep. Do you see how the volume is increasing?
Mhm.
When that volume increases, the value increases. Just to give you and very easy. When it goes down, the value goes down. So again, as trades go up, as people want the stock, you're going to see that. And as you can see, the volume is there. It's there. It dropped down again, but then that's because institutional buyers, they are trying to lock in their gains, because they were on that run from 2 to 30. So
Mhm.
hedge funds are definitely taking advantage of that. So, all right.
Great stuff.
So how is it? So those are the little things. All right. So the second thing I want to talk to you about, Angela, and this is, and maybe you can give me a little bit of information, because when you mentioned those, I guess it was portfolio real estate stocks. Like, can you talk to us about that? Because again, I don't even invest in those, and I would love to start looking at them because the research is still the same. But let me know a
Yeah.
little bit about that, because I know that's something that we wanted to discuss tonight.
Yeah, so I also, in the consulting that I do a lot in real estate. A lot of people don't know that the retail industry is highly tied to real estate. This is before, e-commerce, because nowadays you can have, your own online retail website, right? But, if we think about 10 years ago, that wasn't really the norm. You needed to have a physical location if you wanted to generate sales, right?
Right.
So with what has happened, with everything that's been happening with this pandemic, there's those malls, the malls that house physical retailers, right?
Mm-hmm.
They have been hit really, really hard during this pandemic. So their stocks all plummeted.
Oh, wow.
So if you think about a company like Simon's Property Group, it's one of the biggest
Heard of them.
here in Canada, yes.
Mm-hmm.
So they own a lot of different malls. So the malls are the real estate itself that is within their portfolio. So imagine your Simon's Property Group, you own all these malls all over, Canada, and pandemic strikes. Now you have to close all these malls, right? They make their money off the renters, so the people who are renting, so that retail space, right?
Mm-hmm.
So, all of their stock, their whole portfolio has plummeted. But because they are in the real estate industry, they have a lot of benefits when it comes to the bank because it's still an asset and land itself doesn't really lose value.
Mm-hmm.
So it's just their cash flow is low because of the leasing, right? But with a lot of the agreements that they have, what they've done is they've made it where, okay, you don't have to pay your rent right now. It's like being deferred. So
Gotcha.
they'll still get their money, just not right now. And right. And so a lot of contracts are being ended, but a lot are still being renewed. I've been seeing a lot of e-commerce brands are now eating up all of that retail space that's being left in the malls. So for instance, I know Gucci has left a lot of the malls, right?
Mm-hmm.
They're not going to be around in 2021 in some of the malls that weren't performing the best. But
Okay.
now there's a lot of e-commerce companies that are very successful online now moving into physical retail because there's all this empty space. So I love retail. I love real estate. So for me, it's super exciting. So 2021, you should see a lot more innovative, awesome brands inside of malls, which will drive consumers to the malls because it's all about Generation Z. So the generation coming up has the highest buying power.
Mm-hmm.
So all of those new e-commerce, all those brands make the mall more interactive. There's huge potential for the malls moving forward. Actually, this pandemic is making malls less boring, I am seeing. So if you're thinking about getting into more the real estate side of things, I find when it comes to consumerism, when it comes to malls, it's pretty predictable, right?
Yeah, I mean, and I hear you on that community space. Like, e-commerce is moving into brick and mortar spaces. But
Oh yeah, absolutely. And there's so much potential, and it's very easy for them to open up stores based on their sales data online where the majority of their orders are coming from. So if they get all of their orders from a small city, in I don't know, in California, a certain cities, they already know what mall to pop up in on, right?
right.
And every retailer, anybody who's in retailer knows physical retail always makes more than e-commerce. So these e-commerce, if they're doing well online, they'll do even better in a physical location near the customers who want their product.
That's amazing. And I think that that's kind of the nature of how things will be moving in 2021. So what is the stock symbol for one of these types of portfolios? I mean,
Yeah, so I can search it up on my phone. Let me see
I'm
here.
going to put up our screen again so we can kind of talk to that. And I'll look it up
Yeah,
while you're doing that.
let me get here.
It's a beautiful thing about this whole setup. And folks, this has been done um, via an app called StreamYard, and I'll definitely give you guys the keys on that in a little bit. But Janelle, go ahead. Do you have
Yeah, so you
question?
can search up SPG, which stands for Simon Property Group Inc.
So if you look at the screen, everybody, this is wow. Look at the chart today. Wow.
Yeah, it's on fire. They're going right back to where they were at. Like I said, they're going to get all their money back. So,
Wow.
and your real estate doesn't lose value, right? So even though the pandemic happens, that piece of land's still worth the same amount if somebody wanted to buy it, right?
Now take a look at this, folks. So we're talking about stocks, and we're talking about charts, right? So Janelle, you mentioned this one, so we're gonna look at this chart. Okay, so I guess pandemic. Let's say
Pandemic's over there
pandemic
in
happened
February.
right here, right at this drop. This
They
is
were first to close. So all of those malls were first to, you know, close.
mm-hmm,
So much traffic goes through, right? So they were the first to kind of have
get
to
hit,
pull the plug on operation.
right? So in February, when we were all quarantined and set to drop off, then this is kind of how it went down. Okay, good. So looking at it from there, so this has a run that it could possibly make. So in a perfect situation, 142 is really where it was running at before the market dumped. So now being at 46, 47, 45, 63, running back and forth, back and forth. Okay. Let's see here. Now in June, $63, moving back and forth, 67, 69, and then it's making its run now. You can see the volume chart down here is even increasing, and now it's going from 60 in October up until, so in this last quarter, this run is beginning.
Just a month or two. Yeah.
I see. All right. So based on our previous knowledge of Jumia, then we know that there's going to be some resistance at certain points, right? So
yes,
resistance mark would be 74. Okay. So it hit that, immediately dropped because again, buyers and sellers, didn't get back to it again, went down to 71. So now again, it was on a downtrend. When you see things like this,
yes,
you can actually make money on the downtrend. So there's a way to actually trade the stock in a choppy market like this where you can actually make money going up and down. So here's the example. So let's say that you had Simon Property Group in September 16th, right? And you sold it. You sold all your shares off at $74. And then it dropped to 62. You buy back in with the amount of shares you had. Now from 62 up until, again, 71, let's say you just ride that. That's another $6 you made per share. Sell again. And let's say you sell it and you wait because you see there's a downtrend. You see the next peak was only 66 instead of 71. You see the next lower is actually lower than the previous low. So when from 64 low to 60 low, you see how that's not a good thing.
No.
Okay. But on the uptick, let's say you bought at 60. Again, you can make money going back up again. So that's kind of a choppy market strategy where you can always make money in between. And day traders do this all the time. They're the ones that literally will run from 61 to 78 on that one day, sell off all their stocks, and the price drops because of that. This is literally what day traders do. They wait for runs like this. And as soon as it happens, they're the ones that essentially sell and drop the market down. So institutions and day traders, this is kind of how they make money. But again, we can all make money if we know what they're doing. Okay, so this is making a run over the last 6 months. Let's do the last 5 days. See how choppy it's been over the last 5 days? But over the last day, you made money today. Okay. Not bad. I like this. And this has a lot of room to growth, especially if the economy starts coming back and we're going back into the malls and we're going back into, retail spaces.
Absolutely. Absolutely. And the thing about the real estate company, like I just said, they're still signing up leases. People are still signing up, right? These new e-commerce companies, like I'm saying, they're signing up for. And here's the thing about malls, you have to sign a lease. So the leases usually aren't like a year. Usually they're like 5 years. They might be being a little bit more lenient with the e-commerce companies, but there's not so much space in the mall where it's still competitive. Maybe there's 5 that leave, but there's 20 who still want a spot in the mall. So it's still competitive.
Right.
The malls are still going to make money. And yeah, they're really just deferring right now. So as soon as the malls are open, the last peak was because we thought there was the vaccine coming overnight.
Right.
I guess everybody got excited, but we still got to wait a little bit. But definitely I can see these real estate portfolio stocks performing even better than they ever did because malls have been very boring for a long time.
Right. And that's the thing. I mean, like you said, there's so much room for growth and development in these stocks because again, there's a lot of running room and the economy is getting shut down all across the country. So imagine if these folks are going back to work, going back to these retail spaces, being able to utilize the space and sell, Simon Group is they have to go up. And the run that this thing has up until, again, looking back a year, this thing's supposed to go until 147. So this is a stock that could easily double, if everything's in a good market. So that's a growth stock there. Okay.
Yeah, the same can be said for a lot of different retailers. Like there's so many that went kind of down. There's, Ralph Lauren, there's Lululemon, there's Louis Vuitton. Louis Vuitton, because it's in luxury, has been doing just fine. I don't think their stock has been affected at all. You know what I mean? So there's so many, exactly see what you're seeing there. So a lot of retailers have struggled way more than the malls because the malls are still making their leasing money, right? And they still own the asset. These are the people renting and their portfolio's worth relies on sales. So really it's the retailers who are getting hit the most, not so much real estate. And if, people are trying to double up on, a couple great brands that they know of, right now is the time to get into retail because as soon as things open, all the retail stocks are going to go back to normal. All of them.
And that's the thing. I mean, all of these companies, again, look at all the drops that they all had. I mean, once
Yeah,
people are back out shopping in malls, it's safe to
but
say
they'll
that
all
we're
be
going to have a
back.
good deal.
They'll
So,
all be back.
all right, I'm going to close this out
Yeah,
and
you
you and
got
I are
great
going to
things
talk.
there. Yeah.
So, when it comes to your beginnings in investing, and we talked about this on the phone, but I want to kind of go into that conversation now. I'm a firm believer in, raise up a child the way that they should grow.
Mhm.
Biblical text, basically meaning that whatever you want to see, your kid's future look like, start when they're young, start when they have no idea of what you're doing, but continue to process and subconsciously, give them knowledge to the point where when they grow up, they just fall right in line. So where was your beginning when it came to even understanding things about stocks and trading them, and like how did that begin for you? And yeah, how did you get here? Because everyone's got a journey. So what was yours like?
Yeah, absolutely. So my journey related to stocks started when my mom actually opened up a broker account for me. Not because I requested, I knew nothing about the stock market, just because she had always dabbled in stocks, right? So
Right.
she had her own portfolio. She had always done a lot of investing. And even with a lot of the things that we got when I was growing up, all of them are thanks to her investing. So, we wouldn't be able to afford as much as we could back then if my mom wasn't so savvy. So
Wow.
that's how she would, supplement, income, putting that money, her savings in the stocks, flipping, sometimes she lost, but then a lot of times she won. So it was great. I didn't even know. And here's the thing, I didn't even know that was happening. I didn't know. Like,
Right.
it's not like she sat in front of me, like doing stocks. I just knew that she kind of did it because she opened this broker account. And I asked her, oh, why are you trying to open this account? She's like, oh, it's for stocks. I can put money in it. And then, you can watch it grow over time, yada yada. So I'm like, okay, fast forward, now I'm in university. So during that time I'm in university, I was investing in domains. So buying domains, selling domains. So some domains I would buy for, let's say, $14.99, so $14.99. Within 6 months, I could sell it for $3,000 USD. Just
I've never
because,
heard of that before in my life, and that is one of the most amazing things I've ever. Like,
just
how did you even come into that? Like, how did you even find out about that? Who put you on?
nobody. It was a fluke. I had bought some domains. And you have to remember, this is around the time where e-commerce wasn't like everybody had a website. I didn't have a website, right? Like back then. This is early university. So this was back, I graduated high school in 2010, right? So this is around then. So 2011-ish, let's say. So I
Right.
didn't have like a website. Domains, we're talking about it in school, and we're talking about how, you know, it's more like real estate, like it's like online real estate, and you can buy and sell it like houses. You like own it. So I was like, okay, I'm trying to have some ownership here. I have $14.99.
Right.
So that's kind of how it happened. So then I bought some domains. They gave us some advice on, how to pick names, make sure it's not a copyrighted trademark and all this kind of stuff. And then, I just bought some domains. And then that domain that I had bought, within a month, I had somebody contact me wanting to buy it. And then I didn't know how much to price it at. The person said, $500. I Googled up how much, most people sell domains for, and they're like, oh, you can sell them for up to 15,000, yada, yada, yada. I'm like, what? And then,
$15,000.
yeah,
Wow.
right. And I'm young, right? So I'm like, you know what? Let me be modest, because we're believers out here. I'm like, I don't want to seem greedy, right? 500 and then come back with 15,000. That's a little bit much. So I had decided, you know what? Let me just put 5,000. Let me just drop the one in front. See what they say. I sent that over. The person replies. They say 2,500 or whatever. I'm
Whoa,
like,
that's a big jump.
oh,
That's a
they're
big
like,
jump.
it was a big number. They're like, we're not trying to play games, but that's the final offer, right? Take it or leave it, kind of a thing. And then I was like, okay, 3,000 and it's yours. Because
You
I'm
still
in
pushed them.
business school and I want to feel like I kind of like want the deal. So
That is
and then
awesome.
So yeah, then they sent over the money and then they had their domain. And you know what's funny? The domain wasn't even a .com. It was just a .ca. It was because they already had a .com. They wanted the .ca as well.
Right.
Right. And it was a registered business, like recently. Right. But
Did you
I didn't
know?
have knowledge of that. It wasn't like it's trademarked. Right. And that's
Right.
a big thing people need to understand, that a trademark is different than a registered business. Right.
Right.
So let's say you own a trademark. If somebody's, let's say, cyber squatting on your domain, and they're doing it on purpose. Let's say they reach out to you and go, hey, do you want your domain? They actually can't do that. You can't do cyber swatting. If you go and do that, they can actually use that and get the domain from you for free,
Oh,
right? If
wow.
you can prove that you have knowledge that they have that trademark and you're doing this on ill intent, trying to make money off of it, right? So no, I didn't do anything like that. It was just random. And I didn't really need the domain. I was just doing it because in class they were talking about it. So moving on from the domain, once I had that money, I was like, okay, great. Now I have money. I can put in my savings. And it was in USD. So
Okay.
at the time, I think in Canadian, it was about almost $5,000 anyways. I wasn't paying too much attention. I thought they were talking in Canadian dollars, but when it was sent, it was in US. So I was super happy.
Right.
So that was great.
That's a win.
Yeah, that was a win. So I felt like, oh, I won. It was kind of what I wanted anyways. So what happened was I had that money. I told my mom about it. I was like, you won't believe. I bought this, domain a couple months ago and I just sold it. She's like, she thought it was a scam. So she's like, oh, I'm sure you got scammed online. Why
Oh
would you
boy.
think that? I'm like, no, it's like because it was registered through GoDaddy. And on
Okay.
GoDaddy, it's already all in there. So they go through the platform to sell it to you. So
Right.
it's not like they send you an email and you're like they're having a discussion. No, it's like it looks very professional. It's through your GoDaddy account.
Right.
And then she's like, okay, well, let's see if the money comes in or whatever. Money came in. She was blown away. She's like, what?
First believer right there.
Now she's a believer. And then she's like, okay, well, you need to invest this money. Right? And then I was like, oh, okay, yeah, all right. Well, but for me, I was like, but I don't know how to do any of that. I don't really know how to do investing. And then she's like, I can give you a couple pointers. Like she's no expert, herself. I feel like everybody who gets into stocks, you have some savings and you're just trying to figure it out as you go.
Right.
And so I was watching some YouTube. I mainly just watched Bloomberg, just trying to understand the market, the terminology. It has a whole different terminology in finance, especially in stocks. Even everything you're saying right now, when it goes up, when it goes down, when people sell, all these different companies that, manage portfolios and what they're doing, all of that. So I studied all of that for a while. It was about 6 months. And then at the end of that 6 months, I was watching Bloomberg and they were talking about what was happening for a stock, happening with the stock. And I used to have it running when I'd be working on assignments because still I'm in school at this time, right? So I'm still in school. And then so I said, you know what? I might as well, while it was going on, I could understand what they were saying for once. So I finally, after 6 months of watching that stock market news, I finally understood what they were saying.
It clicked.
And then when it clicked, I then moved that money from my savings into my stock portfolio, right? And then I put some into, Canadian currency and US currency. And then I bought my first stocks. I still focus mainly on retail. So at that time, I was focusing still on retail stocks. And here we are today.
Man, and that's the thing. I think, when you have this subconscious, karma of, your mother putting together a stock portfolio for you, there's magic to that. I feel like money is energy. And once it's accruing in your name or it's accruing because someone is looking out for your future, it's only a matter of time until that comes back around full circle and it hits you. And I think that our parents, first generation, second generation, whatever it may be, they tried their best. And if they got into stocks back in the 80s and 90s, well, God bless them. Most of them didn't have the opportunity to do that, So, as the next generation up, it's our job to make sure that we set up our kids right, and I think
absolutely
what you had going for you was amazing. The fact that your mother even set aside, funds in a stock portfolio to even give you, That's something that I think every successful family and parent should even think about doing for their kids or their nephews and nieces. Like I have, my nieces and nephews, and I put aside $100 every year for each of them, right? And I don't tell the parents this, but now it's on YouTube, so now they'll know. And that's just sitting there. When they're 18, they're going to get it. Some are going to get it in cash, some are going to get it in gold pieces, silver pieces, whatever it is.
Yeah.
But they're going to get that, and it's going to be something they can actually now think about and say, "Wow, well, Uncle Bernie gave me, this money, and what should I do with it?" And then their parents can have that conversation. Well, he invested in it, so maybe you can invest it too. And that's kind of the passing it forward part that I think we all need to get ourselves in a position to do.
I absolutely agree with everything you say. Yeah, if it wasn't for, like I said, if I didn't know, if I also didn't have knowledge that, I had this brokerage account or anything like that, I would have probably just taken my savings and it would have been the same amount then as it was then. You know what I mean? I would have just left it there or spent it. That's the thing. I would have spent it. And you know what's funny? I didn't know how to take my money out of my brokerage account. So she got me there. I didn't know how to do it. And every time she would make it seem so complex. I'm like, what? How do I sell it? Oh, well, I'm like, okay, whatever.
I just want $500. Just give me $500 out this thing, and we'll talk about it later.
Yeah, if you want to get your kids into stocks and tell them to put money, but don't tell them how to take it out.
Yeah, just make that convoluted so they never even get a chance to do it. I like that idea. You'll get that information when you're 18.
Yes, and like I said, it's just better than it being in savings. In savings, I can just spend it right now. I can spend it $3,000, and I see it all the time. In your investing account, it's separate. You don't see it unless you go into your brokerage account and go look at those funds. So,
right. And I think one thing I'll even say for the parents out here who are listening to the podcast, it's important that, you look at what type of account you leave for your kids. So when I was in finance, there are two main types of accounts you can invest in. One's called a qualified account. The other one's called a non-qualified account. The main difference between the two is which one is pre-tax, which one is post-tax. All right. So an idea of a qualified account is a IRA, or in Canada, an RRSP, or in the States, you may have a 401k, 403b. Those are all qualified accounts. Those ones are protected from yearly taxable events, right? Non-qualified accounts would be things like a brokerage account, where you will have to pay taxes at the end of every year based on your gains, but you're able to put money in and out. And the funds that you put in are monies that come from after-taxed locations. So your savings, your checkings, that's the money that you put into those types of accounts. When you invest in a qualified account, that is an actual transaction that has to be logged. And you have a certain limit of money you can put into a qualified account every single year. So for parents, I would really look at, if you're looking at investing in your kids, whether it's a small plan for them, whatever have you, try to find a qualified account that you can put their money into so that it grows tax deferred. Because again, what's the point of having your money get taxed every single year if the goal is to invest it for your kids until they're of age, right? So, for me, that's one of the reasons why I didn't mind investing $100 and just leaving it in a piggy bank, because you can't tax me for that IRS. Like, that's just sitting there. Granted, inflation is going to kill it, but that's okay. We're going to switch to gold coins in a year, so we're going to keep something that's going to have a value increase going forward. But, definitely look into the different types of accounts, folks. I would definitely suggest you guys look at qualified accounts if you can. And, when it comes to growth stocks, and this is something I'll even give you, Janelle, as a tip.
For sure.
When it comes to growth stocks, I only invest in growth stocks in a qualified account called a Roth IRA. Do you know what that is? Have you heard of that before? A Roth IRA? Yeah. It's an American kind of IRA. So if you're not over here, you may not. ROTH.
No, RITH. Let me write that down.
Yeah, Roth IRA. So there are two types of IRAs, a traditional IRA and a Roth IRA. The main difference is that the Roth is an after-taxed IRA, which means that you're putting money like your savings, checkings account, whatever, like after-tax money into it. You have a limit every single year, and there's actually an income limit. So if you make too much money, you can't invest in it. I think that's like 100 and something thousand. Like if you're over that, you can't even invest in it. But if you're under that, which most people are, you can invest in this, and there's a limit every year. The reason why I would invest in that is because if I had bought me a stock, right, and I spent 1,000 shares, and that's what, $2,300 at the time that I bought it, right? Right now it's $31. That means that would be $31,000 worth of stocks that I would have had right now if I kept in there. Ugh, so mad. but still going to grow. So that $31,000, so that growth of 29 grand is literally not taxable to me if I were to take it out. So that's the only account where whatever your gains are in the account,
Okay.
that is your money to keep.
Ooh, okay.
Yeah. Whereas in every other type of qualified account, a traditional IRA, a 401k, a 403b, if we did the exact same transaction, I put $2,300 into Jimmy a stock, it raised to $31,000. As soon as I take out that money, every single dollar is taxed as my income, as ordinary income. So if I took out 1,000, they would tax me 30% if my tax bracket's 30. If my tax bracket's 28, they would take that out of the top, off the top.
Exactly.
And you can't avoid that. So for folks, when you are looking at investing, again, a Roth IRA isn't for everybody, but everyone should have one. Just because, again, it's always good to have a pot of money that's growing in a manner that will not be a taxable event in the future when you need it, as opposed to one that grows and is a taxable event when you need it.
Absolutely.
All right. So that's something for the Americans. Now for the Canadians, I think you guys have some tax deferred options up there, as well as, you know.
Yeah, there's an account I have. I can't remember the name of it off the top of my head, but I think it starts with a T, but that one's not, you know, kind of the same thing.
Kind of the same thing.
Yeah.
I'll look into that. I think on the next episode, I'm going to try and get into some Canadian retirement plans and see what you guys got going on up there. Cause I don't think everyone knows you're a Canadian, right? You're in the great country right up north.
I'm in Canada, but all last year I was pretty much in the US for half the year. So
nice. I'm glad you left because coronavirus, COVID was coming.
Yeah, you know what? I was there and I had to catch my flight before they were going to close the borders. I had to jump on the plane.
You're lucky you got back.
Well, I wasn't trying to stay in LA.
Oh, well, yeah, LA is a nice place. I would have stayed there if I could, but
for not locked up though. That's the thing. I was considering it, but nothing was open, so there was absolutely nothing to do. I'm like, well, I might as well go back home and get work done.
Right. Makes sense. And now look at us. We're on Clubhouse app and life is still good, right? So, so we have 10 minutes. So I kind of want to wrap this up with a couple of questions and just like a couple of shout outs that we can make. So first question I have for you, Janelle, is what is your outlook for 2021 when it comes to just, you know, what you're looking forward to, and just give the folks kind of an idea of what you see when it comes to 2021, when it comes to just, you know, everything that you're doing for yourself. You could even plug that right now, or anything to do with stocks, but just like, what does your 2021 look like? What's that outlook look like for you?
Well, it looks virtual. So what we're doing right now, you know, I love to network. I love to talk to people. So when I travel, you know, I've been to every continent except for Australia. So Australia, I'm coming for you. But I love to travel. I'm always speaking. I'm always networking. I know so many people. You know, thank God I didn't catch COVID because I'd be shaking hands all day, every day. So thank you, Jesus. But moving forward, definitely all virtual. You know, we did a lot of tours and events, so a lot of trade shows. So when people want to start their business, they tend to go to trade shows. So the trade shows is where you can meet manufacturers, packaging companies, people in more B2B, so business to business. So we're going there to develop a relationship with somebody for you can start a business, right? But now I've been moving all of that virtual. So we have a ton of events. I have about 6 events we're focusing on for this whole year coming up. That used to be in person. Now they're all going virtually online. So that's the outlook, just going completely online, switching out my networking, focusing on better production. I have all my handy podcast equipment. So get back on my podcasting.
Oh boy.
Yeah. So what about you? You tell me what is your outlook for 2021?
Well, I'm gonna first start off with a mic stand because good Lord, like what is this? I feel like I'm in church, AY, trying to sing with the chorus. Like, why am I holding a microphone like a pastor right now? So that's step one. I think that's coming on Sunday.
Yeah.
2 of them. So, but yeah, we definitely have gotten outlook for 2021 is really to make sure that we invest in all of these stocks that are depressed right now. You know, my goal is I got to get that $31,000 back. That's the first goal. Get that back. Goal number 2 is to launch a business that I've been working on for the last 2 months undercover. So you guys will hear about that later. But
Cool,
that's an
cool.
undercover business, but it's going to get launched for 2021, which I'm really excited about. And then again, like you said, virtually doing things like this. This is our first live on YouTube, and I have to shout out the Only Letter from the Oh That Sexy podcast. He actually had a conversation with me. We had a conversation 2 weeks ago, and he said, "Hey, you should get on YouTube." I'm like, "I don't know how to do anything on YouTube. What are you talking about?" He's like, "No, you need to get on YouTube." And I'm like, "Sir, all right, I'm listening to you. I'm just gonna blindly try." And that's where I found StreamYard. So for folks who don't know, StreamYard is just go streamyard.com, and it's a way for you to actually host live anything, whether it's interviews like this, content where you can actually have information pulled up the way that we had it, and you can do different things. This is StreamYard is really capable of doing a lot, and it's allowing us to have this conversation right now pretty cool virtually. But also you can get up to 6 people on here. Now I have their logos and stuff still on because I refuse to pay them. I'd rather plug them than pay them because technically they're like my sponsors at that point, right? So I'm sponsored by, I'm just joking, I'm not sponsored by StreamYard, but they are the ones hosting this. So, for folks who don't know about it, definitely take a look at it. It's pretty easy to plug and play your things into this. And I think, Janelle, it's pretty easy, right? Like you logged in, it was simple.
Yes.
There was no.
Oh no, I'm all for it. You know what? I have Zoom, and this is way better. I'm already like, yes. Because it just already looks way better. I really like it. When I use Zoom, the difference is when it comes to the host, I like the view here better. Yeah.
Yeah. No, the view is nice. And I mean, this is our first time doing it. So, I mean, you're going to see a lot more of these. And I think for 2021, the last piece is really to make sure that, apps like Clubhouse, that we're utilizing that and building a community. My goal here is to have Wealth Wednesdays be on Clubhouse where we can actually have these kind of conversations. And you're definitely going to be a moderator. You know that. You already know that. Now that you're the first guest on the Way Podcast YouTube channel, you have to show up and represent in our clubhouse when we get it up and running.
Not in the morning, because in the morning sometimes I got an attitude, but
listen, that's how it works too.
After lunchtime,
pick the attitude.
All for it.
No, attitude is good. Trust me, you got to have some spunk in this time, this day and age. People without spunk get stepped on.
That's true.
But yeah, so I mean, this was great, Janelle. I really appreciate you coming through, and I know you have people that are going to probably listen to this, and if they do, I want you guys to know that Janelle's pretty cool, and we're going to definitely have her back. For more of our information, I want you guys to go visit our website. It's theway.com, and Janelle didn't get this she didn't get this domain name before we got it, so I didn't have to pay her for it. Thank God, because I did not have $5,000 to barter with you on. Okay, no.
Yeah. My negotiation skills got better. So.
Oh, I'm sure they did. I'm sure you were killing it out here, like the Monopoly man. Like that's just like I feel like that's a game that you play with your friends, and you'd probably like make them all angry with you because you're just taking all of Boardwalk Park Place, making them pay your rent.
You know what? It's so funny, but you know what? Anybody can get into domain. So like I said, even when it comes to investing, you know what? It started with first getting some money, right? So try domains. If you just have a little bit of money, it's kind of like when there's demand, kind of like real estate. If suddenly people want this property, the value goes up. So try it out.
Well, I know my listeners are definitely going to take advantage of that and try to get going on that. And you'd say the best way to do it is to try to do it with a GoDaddy type of system, because I mean they have a really smooth system. I mean our website's on GoDaddy, so I already know it's smooth.
Yeah, like it really doesn't matter. So you know how sometimes you Google up a site, right? And sometimes it has a landing page, and it's just like, oh, this name is taken, but if you want it, right? So there's other places where you can list your domain. So yeah, you can have it on GoDaddy, but you can also list it in other places where other people can find your domain. So it's just like you're listing a piece of property. You can have it here listed here, but then you also can have it listed in all these different places. And then whoever contacts you from one of those domain places, then they're the ones who take that little fee.
That's super dope. I'm gonna look into that. I'm gonna look into that and see what I can do.
Get a domain and try it. The best way to find good domains is to use Google Trends. So you can go to Google Trends. .com, which is searches what people are searching. People like to buy things that are having high searches. So even if something new or trendy is coming up, you're going to want to maybe get a domain name with that, whatever terms are very popular, key terms.
Okay, wonderful. All right. Well, Janelle, I appreciate that. Do you have any shout outs you want to make right now since we got another 3 minutes?
Yeah, you know what? If you want to follow me, you can find me at Janelle Alvarado. So you can see my little label there. Put a little at in front of it, and then you can find me on Instagram, LinkedIn, Twitter, everything. And then if you want to join my community, we have over 45,000 followers just on Instagram, and then a whole bunch of people hanging out in our community app. It's free to join. You can connect with other entrepreneurs who are in retail. So you've got to be interested in retail for that one. And yeah, you can find us at retailboss.inc on Instagram. And you can also find us, our domain is retailboss.co.
Amen to that. And everyone, please definitely give Janelle a follow on Instagram, get into her community. And again, like I said, the purpose of the way is really to make sure that we continue to connect and add resources together. I feel like as we progress as a community, everything just wins. And it starts with being resources.
Exactly. And just like we're saying, now that we're moving into more virtual, it's not just about following somebody online. You have to have a conversation.
Mm-hmm.
You don't just follow somebody, send them. Put some effort.
Right.
When people just follow me and then just never messaged me. What's the point? Like, what is the point then? I don't know why you're following me in the first place. I don't know what we could possibly do together. Yeah, I see kind of what you do on your profile, but I have so many other people to deal with in a day. I'm not going to remember you unless you build that connection. So that's a big thing too. And that's what we're learning from using Clubhouse. But I feel like a lot of people are just following, but not going through with the conversation. But it was, I DM'd you, told you a little bit why I'm clicking the follow button in the first place. And then, we talked, and then you called me up. Right. And then this happened. So actually networking the right way. And I think we're doing a great job. So kudos to us.
Kudos to us. That's what I'm talking about. Let's keep building this network. All right. So everybody, I want to say thank you for those who are following on Instagram and are kind of in and out of there. Appreciate you guys. And again, for everyone who's going to listen to this, again, this is the first live Instagram, YouTube for the Way podcast. This is the first of many. I want to thank our guest, Janelle Alvarado, for coming through. Literally asked her today, this afternoon, and she agreed, and it was just an amazing situation. So thank you so much. Again, if you follow us at theway.com, you can follow me at Benargio on Instagram and in Facebook. Like us, send our material out. And again, if you have something to add to the conversation, just message me, DM me, and I'd like to have you on so you can kind of give our guests another run for their money, because we're doing this all year long. All right. So Janelle, I appreciate you. Thank you so much for coming through. And until the next time.
Okay, great. Thank you so much. Bye, everybody.
All right. Take care. All right, folks. Thank you so much for joining us on this podcast. I hope you guys all learned something great about stocks, about trends, about mall stocks, about domain names. I mean, Janelle is a wealth of knowledge. And going forward, again, we're going to be doing this every single week. So please come back. And if you don't just like our page, share it with your friends. And again, continue to add to the community, because as we grow, we thrive. All right, folks. Appreciate you all. Until the next time, we are out.
Come and join us. Yeah. Let's have a good time in Jesus. Put your hand together if you want to.